Why are you not profitable? We're in business to scream, say yes to profits. It's not just a play on words. It's exactly what every business owner should do. They should say yes to profits, right? But oftentimes, business owners are not profitable, right? But profit is how you keep score in business. So, what is your score? Have you ever felt like you looked at your income statement and you're super excited because at the bottom of your income statement, you have a net profit? And you're celebrating, you're like, yes. And then you look at your bank account and you're like, Hoppo, where's my money? You ever asked yourself that question, or you ever wonder why there's a different number at the bottom of your income statement than what is shown in your bank account? Like, you may be profitable and you may have money in the bank, but those numbers seem to never ever match. I get this question a lot, and here's what I can tell you: there is a connection between your income statement and your balance sheet. That connection will give you the answer you need to know why your income statement has something different than what is in your bank account. And so today, I'm going to deep dive into the understanding the income statement and understanding the balance sheet and give you the answer to why you may be profitable on paper, but then that amount doesn't transfer to your balance sheet.
Welcome to the Say Yes to Profit Show. I am Octavia Conner, a CFO who helps service-based entrepreneurs implement the financial systems, strategies, and solutions to increase cash flow, reduce taxes, generate wealth, and say yes to profits. Say Yes to Profits is a full-service accounting firm based in Atlanta, Georgia, but we service clients nationwide. Again, welcome to the Say Yes to Profits Show.
Hi, I am Octavia. I am the CFO you need in your life if you're ready to say yes to profits. Now, what I want to do right now, I'm going to go over the income statement first. So, I'm going to pull up an income statement on my trusty Vibe board. And we're really going to deep dive into the purpose of this report. Now, an income statement is also known and often called a profit and loss statement because it shows if you're profitable or not. An income statement will show here the sales that you've made for a particular period of time, all right? You're also going to be able to take your income statement and see your cost of goods and services sold, okay? Then you're going to be able to understand your operating costs, which is the amount that you see here, all right? Next, you will be able to see if you have a net income for your company. That net income can be we're going to say, put this right here. You can have a net profit, which is absolutely what you want. That means you have more income coming in than expenses and COGS going out. COGS are your cost of goods and services sold. Now, when you have more income coming in than expenses going out, you have a net profit, okay? But then you also can generate a net loss. So we're going to change the color so you can see that. So a net loss is what we don't want. A net loss results from having more expenses for that particular time than you have in income. Okay? When you have more expenses, more that went out in COGS plus expenses than you do in the income that you brought in for that particular period, you have a net loss. Of course, you always want to make sure that you generate a profit in business, right? This is the income statement. In addition to that, you can use this income statement for so many different things. Your income statement can be used to create a budget. Your income statement can be used to to identify your peak seasons versus your slow times. Sorry, y'all. Okay, so you can take your income statement and you can identify which service is most profitable. You can identify which service is costing you more money. You can identify with your income statement your margins. Okay, now listen, if I happen to write a word wrong or spell a word wrong, I'm going to put this right here, A through Z. You pick the letter that goes in the word, okay? This is margins. Your income statement will tell you your margin, your net profit margin, your gross margin, the margin per service and per product. You can pull all of that information from this report. So your income statement is highly important. But it's not the only statement that you need to focus on, all right? So let's go to the next statement, which will help you understand why your business is profitable on paper, but then you may have cash flow problems, okay? Calling all service-based entrepreneurs and consulting firm owners. Do you find yourself consistently juggling expenses, barely making ends meet, and scratching your head, wondering where all of your hard-earned money has disappeared to? Are you sacrificing your salary and your personal credit just to keep your team paid and your business afloat? Does your business go through this feast or famine mode depending on the time of the year? Like one month, cash is coming in good, everything is great, and then the next month, you don't know what you're going to do. Or picture this. You're cruising along, making progress, growing your business, you're doing the thing, and then boom, out of nowhere, an unexpected expense blindside you and knock your bank balance and your savings to a scary amount. If you've ever felt fed up with the relentless struggle of cash flow in your business, you are not alone. And guess what? It is time to put an end to the cash flow frustrating cycle. Therefore, I'd like to invite you to the Cash Flow Blueprint Masterclass. This game-changing class will empower you to say bye-bye to all of your cash flow struggles, say goodbye to your sleepless nights, and hello to a future where you smile when you log into your bank account. Listen, to join me, register right now at SayYesToProfitsMasterclass.com. It's going down on March 28th at 3 p.m. Don't allow your cash flow challenges to hold your business back any longer. Come join me, SayYesToProfitsMasterclass.com. And if you register as a VIP, you will start today with prospering, with growing your business, with having a positive cash flow, with all of the bonuses that's going to be provided. Again, go to SayYesToProfitsMasterclass.com. I'll see you at the masterclass. Toodles. So this next statement is your balance sheet. Now, a lot of business owners do not pay attention to their balance sheet, and that is a mistake. Now, your balance sheet identifies the financial position of your business. Financial position, okay? Your income statement, again, we need to know the difference between these two. Your income statement identifies your income, your expenses, your net profit, and your net loss over a particular period of time. So with your income statement, you can pull it for the month of January. You can pull it for quarter 1, quarter 4. You can pull it for the year, right? You can pull it for 2 weeks. Your balance sheet, the date in which you pull the balance sheet, it is going to identify the financial position of your company for that particular specific date. Get clear on that, all right? We're not done. The next thing with your balance sheet, your balance sheet also identifies your assets. So at the very top part of your balance sheet, let me make this bigger so I can make sure you all are getting this. At the very top part of your balance sheet, you're going to have all of your assets. Your assets are the things that you own, right? So your assets could be things like your bank account, okay, which is going to tell you your cash that you have on hand. It could be accounts receivables, inventory. It could be buildings, anything like that. Those are your assets, okay? They're going to be at the top of your balance sheet. Then at the bottom of your balance sheet, you're going to have next your liabilities. Also, at the bottom of your balance sheet, You can see it here on the screen. You have the equity. Okay? So your balance sheet again is going to show you your assets, your liabilities, and your equity. Your liabilities could be your debt, right? Your credit card payments. Your equity could be the partners and shareholders' equity and distributions in the company. Anything that they contributed and invested in the company, anything that they taken out of the company, that is going to be listed under your equity. All right? So let's pull this all together. You have your income statement here, which says if you have a net profit or a net loss, of course, you want a net profit. You have your balance sheet. Now, the thing about your balance sheet that I failed to mention, it will identify the worth of your company. It is going to tell you if you're operating your business upside down. If you have more in liabilities than you do in assets, you're operating your business upside down. You'll be able to find that information on your balance sheet, okay? Now that you understand your income statement versus your balance sheet, now let's deep dive into how you can have a net profit and yet that number does not match the amount of money showing in your bank account, or worse, the number in your bank account is drastically less than your net profit, right? Let's now pull everything together so that you understand what's really going on in your business, okay? So let's say you earned for a particular month in revenue $30,000 for that month, okay? And then let's say your expenses plus your COGS for that month came up to $20,000, right? So when you take your revenue and your expenses and you subtract these from each other, that means for that month you actually had a net profit of $10,000, okay? And so you're happy, right? But when you look at your bank account, just change the color. So you look at your bank account, but your bank account says you actually have a negative $10,000 as the balance. And you're like, again, Hoppo, what is going on? Where's my money? Right? That's what I be asking. Like, what's going on? Okay? So let's say this happened to you and you're trying to figure out why. Let me tell you why. Remember on your income statement, I said your income statement identifies your income, your COGS, your cost of goods and services sold, and your expenses, right? Stay with me. Your balance sheet also have things on it that are not on your income statement. And so what happens is that the items on your balance sheet, remember I mentioned your liabilities. I talked about your credit cards. I talked about your loans. I talked about money that you as the owner or the partners are taking out of the business, right? Stay with me now. Those things are on your balance sheet. They're not on your income statement. When those things take place in your business, they take money out of your business, but they do not belong on your income statement, okay? So your credit card, the actual credit card purchases are on your income statement, but the credit card payment itself, that is on your balance sheet. So using this example, all right? So again, your revenue, $30,000 for the month, your expenses $20,000 for the month, your net profit $10,000 for the month. You're happy here, right? You're okay. We're gonna make that green because you're happy here, right? Because you're like, I did it, mama. I have a profit. And then you look at your bank account here and you're like, mama, what's going on? Let me tell you what's going on. Once you earn this $10,000, let's say you have a credit card payment of $10,000. Oh man. Then you have a loan payment of $10,000. Oh man. This is why your bank account is negative $10,000. Even though you generated a profit, you wasn't able to keep that money in your business because you have these other things that are coming out of your company that are not on your income statement, but they're still taking money out of your business, and therefore they take the cash away. So what does this tell you? This tells you that not only should you, say yes to profits, but you also must say yes to cash flow. This tells you that you need to not only pay attention to your income statement, but you also must focus on your balance sheet. You must focus on your cash flow statement. You must put two things together. You must make sure, let's take the smiley face out, right? You must make sure that there are two things taking place. You are profitable and you are cash flow positive. And you must make sure you do these two things, you all, at the same time. This is the key to actually really being profitable. This is the key to truly saying yes to profits the way we help our clients say yes to profits, okay? If you have any questions or comments about this, leave your questions and comments below. I've also created a free cash flow mastery toolkit. Click the link below and download that toolkit. That toolkit is going to help you not have the sad face in your business, but actually make sure that you're profitable and you're cash flow positive at the same time, all right? Make sure you hit the like and subscribe button as well. This is Octavia Conner, and until next time, say yes to profits. Toodles!
Thank you for watching the Say Yes to Profits show. Make sure you download the resources given in this episode and follow me on Instagram at Octavia Conner CFO. And always remember, say yes to profits.